Hi, this is Mark Woodward, your straight shooting advisor. Welcome to the KANA Private Wealth Group third quarter tactical brief. Let me begin by saying that I hope that you and your family have been able to be safe and healthy. These are certainly trying times, and there's still much uncertainty around when we can get back to our normal lives. Many schools are weighing how to safely reopen, as are many business owners. So with so much uncertainty, I wanted to review some economic indicators and my outlook personally for the remainder of this year. So the U.S. GDP was down, or gross domestic product was down 9.97% from the first quarter to the second quarter of this year. That puts the U.S. economy officially in a recession as its second quarterly drop in economic output. Now, according to the U.S. Department of Labor, unemployment spiked to 14.7% in April and has come down to 10.2% as of the end of July. The S&P 500 index is now up 3.57% year to date as of August 10th, which is up from the low for the year of negative 31.04% as of March 23rd. Now, according to the U.S. Bureau of Economic Analysis, U.S. personal savings rates have gone up while personal consumption has gone down. Now, this makes sense as many people are now unemployed or underemployed and are saving as much cash as they possibly can regarding all the uncertainty that they have about their futures. Now, let's look at a few leading indicators from an economic standpoint. The U.S. Manufacturing Purchasing Managers Index, or PMI, as compiled by the Institute for Supply Management, was at 54.2 at the end of July. Now that's a 3.04% increase from last month and a 5.86% increase from a year ago. Generally, a PMI over 50 indicates market expansion or an overall expansion in the manufacturing economy here in the United States. So according to the Federal Reserve, corporate capital expenditures for most districts has been increasing month over month since bottoming out in March of this year. If we add to that better than expected second quarter earnings reports from many companies despite COVID-19 and the many shutdowns, I think that we're set up for the markets to finish 2020 higher than we were at mid-year. Now, it's undoubtedly going to be a volatile ride between now and then as we have things like the presidential election, the lack of a vaccine currently, and many geopolitical events that are taking shape. Against this backdrop, we completed a rebalance of all of our models in July. We did not replace any of our managers due to our ongoing screening and selection process, but we do continue to monitor some on a watch list. Now, because of the challenging economic conditions that we're in, we have had some of the companies in our EIG and trust portfolios either suspend or cut their dividends, or suspend or reduce their dividends, I should say. And so we did make some tactical allocation changes in some of those models. If you have any questions about your accounts or need help navigating these troubling times, please give me a call, and remember, at KANA Private Wealth Group, we help you put your family first.